Happy Friday, traders. This is Fawad Razakzada, market analyst for City Index. Today is the 29th of November. So the markets are looking a little bit interesting ahead of the new month next week. And the dollar yen has fallen to test the 150 handle ahead of next week's key economic data reports, including jobs data from the US coming in on Friday. But we also have several other economic reports from the US next week, including the ISM Services PMI on Wednesday and the manufacturing PMI on Monday. Sandwiched between those two is the JOLTS job openings, which has become quite increasingly in focus of late because the Fed's focus has turned into employment from inflation. So ahead of all of that, the dollar has weakened, as you can see, against the yen here. And this pair is now testing the key 150 area, this shaded blue region, which was previously resistance. And now it could potentially provide a tradable bounce, potentially back to the 200-day moving average and price support and resistance area at around 152 or 151.50 zone. So that's the next area to watch on the upside should we get a bounce here. Whereas if this area of support gives way on a daily closing basis, then that could potentially pave the way for a drop to 147.20, this line here, or even lower than that in the days ahead. Meanwhile, expectations are rising that the Bank of Japan is going to hike interest rates in December, and that's what's causing the yen to rise across the board, not just against the US dollar. Looking at a few other currency pairs now, the euro dollar is testing this area of resistance at around 106, which has been a pivotal zone in the past. It will need to close above this area to potentially trigger a short squeeze rally towards 107, but if it doesn't, then the series of lower lows and lower highs will remain in place and therefore keep this bearish trend intact. Should the selling resume from around this area, 105 could be the next downside target, which was previously a support level that gave way last week before we reclaimed it. Below that, 104.50 is the low from October of last year's low. And that's the line in the sand for me now. And if we go below that area, that could pave the way for 103 or even lower in the days and weeks ahead. For more market insights and analysis, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.